How are you going to deal with inflation? Can you pass on actually that consumer price increase to people that are buying your products, or do you have to, squeeze the supply chain on the other end?
Good morning, and thanks for having me. And you're right. I mean, we're very pleased with the sales development this year, and in particular in the third quarter against a very strong comparable. When it comes to inflation, what you're seeing is steady progress over the last 3 quarters when it comes to improving our pricing. So we were very clear in previous quarters that there was going to be a bit of a time delay since we have contracts in place with our retail partners. You can't pass on things from one day to another. But now that action is underway. So on the 9-month period, you're seeing pricing of 1.6%. When you look at the third quarter alone, it is 2.1%. And we continue to expect improvements on pricing for the remainder of the year. Overall, I'm pleased that growth rests on pricing, but also on mix and volume.
Tom and I were joking around saying, like, we both love coffee. Also your pet sales are going really well, and I'm probably contributing to it. How do you deal with energy costs going up? Is it as easy as actually telling everyone to switch off the light, or do you have to hedge? Does it actually affect Nestle going forward?
So we're not per se an energy-intensive company when it comes to our processes. Of course, we did feel the change, and so the discussion has kind of shifted from commodities alone to energy and also labor. Energy, we feel it mostly in our trucking and shipping costs, and this is where it comes in. So it does have some impact, but obviously there's some other industries that are more exposed.
Mark, can you give us a sense of the impact then on margins as we look ahead to 2022?
Yeah, so this third quarter for us is traditionally a trading update, so it's not a detailed review on margins for the 9-month period or ahead. We have confirmed our margin guidance for the full year, and we will provide then a new update on our margin outlook when we have our full year reporting in February. What we see from the inflation front is that the situation is going to get worse, and then of course we're working on pricing to make up for most of that, and also on internal efficiencies.
Mark, I know you'll be, talking a lot at COP26 about sustainability, about some of the initiatives that Nestle has done. This can be packaging, which is low-hanging fruit, or actually some of the supply chain, how you ship things. But it's also actually meat substitutes, which is one of the units that you're trying to grow the most, or supplements. How do you see Nestle changing as there's more commitment to ESG in the next 5 years?
Yeah. So we've been working very intensely on all of these items that you mentioned. So packaging is a key one. We have started in our research and development group an Institute for Packaging Sciences because we didn't just want to be a passenger to whatever the packaging industry was delivering to us. We also wanted to be a co-developer on new solutions. And then plant-based foods, replacing dairy and meat products and giving people more balanced diets. They also have a huge environmental benefit. Usually the sustainability footprint is so much better compared to dairy and meat products. And so both of these are platforms that we're working on a lot.
Mark, are you planning to build out that portfolio of plant-based products? And if so, to what extent, and what is the growth potential? What are the sales potential around that segment of the business?
Yeah, so we've been at it for quite a while. And in a sense, when it comes to catering to a niche vegetarian or vegan group of consumers, we've been at it for 30 years. What has happened over the last 3 years is we opened it up to more mainstream consumers by offering, for example, plant-based burgers, sausages, and now, of course, spreading to dairy as well. So all of this is posting double-digit growth, so very satisfying growth, clearly on trend. And it doesn't seem to be a 1-year fad or a 2-year fad, but rather something that is now going mainstream and suggests strong growth rates for the years to come. Size-wise, if you throw it all in, like the food and the beverage and dairy side, we're at around $1 billion, and again, growing double digits, so very satisfying.
Mark, give us a sense of how much, what is the most difficult part as you try to transition to a lower emission company? How much does agriculture come into play? And how are you dealing with some of the raw materials and the farmers?
Yeah, so that is exactly the most challenging part. You remember we published our net zero carbon roadmap last December, and that roadmap told us that 2/3 of our challenge lies in our agricultural supply chain, and hence we now issued more specific plans on the conversion and transition towards regenerative farming practices. To us, the notion of what we call a just transition, like finding ways with farmers to have better sustainability and regenerative practices, but help them to do it, to provide know-how assistance, and in some cases help to arrange for financing support, that is key. To us, it's not fair to simply throw all of that work at the feet of the farming community around the world. It's important that we provide the assistance, and that means literally being in contact with hundreds of thousands of farmers around the world for the various commodities that we source, and helping them make it through that transition.
Mark, where do you see the most resistance, actually, in some of these conversations that you're having?
So again, this is very patient, diligent work location by location, which is why, as a company, we need that full 3-decade time span to 2050. We have a 20% carbon reduction target by 2025 and a 50% reduction target by 2030. Let me say that for us, it's no longer just a plan. It's already a reality. So we have left peak carbon behind. It was somewhere in the time frame of 2018, 2019. From then on, even though the company kept growing strongly, we are already on our way down. So it is becoming a reality. And I hope that that's also going to become a discussion at COP26, like who is just issuing plans and who is actually fully disclosing and already on the way down. So yeah, there's always pockets of resistance, but frankly, there is a path and we're on it.
Okay, on the path around reducing that carbon footprint there at Nestle. Let's switch focus, if you don't mind, to acquisitions. The CFO of Nestle has talked about the desire to make some mid-sized acquisitions given the strength of the balance sheet. Can you give us some clarity on what you are looking at in terms of the firepower? You've got a lot of dry powder, Mark. What are you looking at adding potentially?
Yeah, so let me confirm that while, of course, we're open to acquisitions of all shapes and sizes, that mid-size is probably our sweet spot. Fully agree and reiterate what our CFO said there, because that's usually a much easier integration job than large-scale acquisitions. And also, there's usually less of an antitrust divestiture problem associated with these deals. So in this high-priced environment, it's important to be selective. We're open across the full spectrum of our geographies that we serve and the categories that we serve. Obviously, some of the high growth ones like coffee and pet care are of particular interest. But again, when you're in a business, if you're committed to growing it, it also means being open to acquisitions.
Mark, I've been badgering Tom to try and get a dog. I have a puppy, obsessed, like many dog owners. I think me and around 3 million other Brits have gotten a puppy in a pandemic, or certainly a pet. How much more can you grow that business?
Yeah, so this is something we saw not only play out in the UK, but also elsewhere in the world, that people have been getting more interested in pet adoption during the pandemic. And clearly, that made a one-time huge step up when it comes to pet ownership around the world. And then you have on top of that continued premiumization, like people really being ready to serve high quality pet food to their dogs and cats. So I think while you will not be able to repeat the enormous growth rates that we saw in 2020 and the first few quarters of this year, what we're also not seeing is the elements of a hangover. So basically what you're seeing is continued nice growth from a higher base that was reached over the last year and a half.